Investment in securities market. Note, disclaimer. The contents of this publication do not necessarily constitute or imply its endorsement, recommendation, or favoring by us. This publication is meant for general reading and educational purposes only. The statements, explanations, concepts are of general nature and may not have taken into account the particular objective, move, aim, need, circumstances of the individual user, reader, organization, institute. Thus, we do not assume any responsibility for any wrong move or action taken based on the information available in this publication. Thus, we do not assume any responsibility for any wrong move or action taken based on the information available in this publication. Therefore, before acting on or following the steps suggested on any theme or before following any recommendation given in this publication, user, reader should consider seek professional advice. The publication contains information, statements, opinions, statistics, and materials that have been obtained from sources believed to be reliable, and the publishers of this title have made best efforts to avoid any errors. However, publishers of this material offer no guarantees and warranties of any kind to the readers, users of the information contained in this publication. Since the work and research is still going on, we do not warrant the totality and absolute accuracy, adequacy, or completeness of this information and material, and expressly disclaim any liability for errors or omissions in this information and material herein. We do not accept any legal liability whatsoever based on any information contained herein. Hello everyone, welcome to this masterclass on the securities market. The securities market provides opportunities to grow wealth through investments in shares, mutual funds, and other financial instruments. However, investing also involves risks. In this video, we will understand different types of risks, how markets function, and investment processes, mutual funds, commodity markets, and investor protection measures. Let's begin. Investments are subject to various risks. 1. Market risk or systematic risk. Risk caused by overall market movements due to economic or political changes. It affects all investments. 2. Unsystematic risk. Risk specific to a company or industry, such as management or operational issues. 3. Inflation risk. Risk that rising prices reduce the real value of investment returns. 4. Liquidity risk. Risk of not being able to sell an investment quickly without loss. 5. Business risk. Risk arising from poor business performance or competition. 6. Volatility risk. Risk due to frequent price fluctuations in the market. 7. Currency risk. Risk arising from changes in foreign exchange rates affecting international investments. How to mitigate risk? Let's look at some key strategies to reduce your exposure. Risks can be reduced by diversifying investments, investing for the long term, and asset allocation. Regular portfolio review and investing according to risk tolerance. Prerequisites to invest in securities. Before investing, you need PAN card, bank account, demat account, trading account, and completed KYC process. The primary market is where companies issue new shares to investors through initial public offers or IPOs. Investors buy securities directly from the company. Applications supported by blocked amount or ASBA allows investors to apply for IPOs while funds remain blocked in their bank account until allotment. UPI enables faster IPO applications through secure payment authorization using mobile apps. The secondary market is where investors buy and sell already issued securities through stock exchanges. Know Your Client (KYC) verifies investor identity and ensures safe and compliant trading. Orders can be placed online trading platforms, mobile apps, or through brokers or dealers. Trading occurs on working days of stock exchanges. Settlement generally follows a T+1 cycle, meaning settlement happens one day after the trade. Pay-in day. Investors deliver securities or funds to the exchange. Payout day. Investors receive securities or funds after settlement. Margin allows trading using partially funded positions. Pledging securities enables investors to use shares as collateral for margin trading. A contract note is an official document issued by brokers confirming trade details such as price, quantity, and charges. Basic Services Demat Account (BSDA) is a low-cost demat account designed for small investors. Benefits of BSDA include reduced charges, simplified services, and it is suitable for small holdings. Annual maintenance charges (AMC) is the yearly fee charged for maintaining a demat account. Mutual funds pool money from many investors and invest in diversified securities. Salient features include professional management, diversification, economy of scale, liquidity, simplicity, and tax benefits. Mutual funds are classified as equity funds, debt funds, hybrid funds, and solution-oriented funds. Mutual funds use a riskometer to show investment risk levels ranging from low to very high risk, helping investors choose appropriately. A SIP allows investors to invest a fixed amount regularly in mutual funds. Advantages of SIP include disciplined investing, rupee cost averaging, power of compounding, and affordable investment. Commodities are physical goods such as gold, silver, oil, wheat, or cotton traded in markets. Prices of commodities fluctuate due to supply and demand changes. Investors and producers use derivative contracts to lock prices and reduce uncertainty. Benefits of commodity. Derivative exchanges include price discovery, risk management, transparency, and standardized trading. These exchanges provide platforms for trading commodity futures and options. Farmers can hedge price risk by entering futures contracts through registered brokers, protecting income from price fluctuations. Do's and don'ts for investing. Do's: verify broker registration, understand risks before investing, and keep transaction records. Don'ts: avoid rumors and tips, do not share trading credentials, and avoid unrealistic return promises. If investors face issues, contact broker, approach stock exchange, or escalate through regulatory platforms. Investor protection mechanisms ensure transparency and fairness. Investing in the securities market can help build long-term wealth when done with knowledge and discipline. Understanding risks and market processes empowers investors to make informed financial decisions. Thank you for watching. Hope this guide helps you in your investment journey. This real-life video footage, published only for the purpose of educating the public by making them understand how the real-world situation will be. We are not providing any buy or sell advice in this video. Technical Charts Official is not responsible for any losses or profits resulting directly or indirectly from the information provided. Please consult your financial advisor before buying or selling. Follow for more.